Hey guys, it's Jen.
And Bryan.
And Tammy.
We are talking about home loans and all the fun things that go into that with the amazing Tammy from Caliber Home Loans. And right now, we wanted to know. So, we have just found the perfect house for our clients. We have written a contract. It has gotten ratified, meaning all parties have agreed to all terms and we are ready to rock and roll.
Yes.
So, we have sent the contract over to you and over to the title company. What happens? Question mark.
Well, hopefully from the lending side, there's not too many surprises. We may have to spruce up the file, get some additional pay stubs if you've been out shopping for quite a while and getting some updated asset documents. At that point, what I would want to do with a client is discuss with them that particular property, taking a deeper dive into what do the financials look like. Do we have the HOA fees correct, or condo fees? Do we have the taxes? And then also talk about where we are with rates. Making sure that the lock date is going to cover from the time that we lock until closing, and having that discussion with the client. Locking the loan, then we will disclose on the loan, which means we send you a bunch of papers. It's all electronic. Most companies at this point have gone to e-signatures. There are a few documents that you would be required to print, we call wet sign, and then scan and send back to us. Basically, those are some of the government forms that they don't like electronics, so that's what we have to do. And once your disclosures are back, that means that you are formally acknowledging that you would like to move forward in the mortgage loan process. You actually do not have a mortgage loan application in until you have all of those elements, one of them being the address of the property. So you have basically just an informational application until you have identified a property and are under contract.
Can I jump in real quick?
Yep.
So the state of Virginia requires in the NVAR contract that you have to have made and applied for your actual loan within 7 days of ratification. So it's super important that once you have met with your lender and decided to move forward with them and have all of those things in place that are actually in your contract per the current contract, that you have 7 days to make application with your lender. Otherwise, you're in default. Oh, that's not fun.
Yes.
Do continue.
Yeah, and this may be one of those longer videos as well. Being in default, that's another thing that as a lender I have to be conscientious of. You will have several contingencies. One that typically you and your realtor will work on is the home inspection. As far as a lender is concerned, typically you will have an appraisal contingency and a financing contingency, and those are all on the lender to make sure that they are performing on your behalf with your help to make sure that you are not in default of your contract. After we receive all of your disclosures back, we will then order the appraisal on your behalf. An appraisal will basically make sure that we are loaning you the amount of money that an independent appraiser feels that the property's worth. Then we will pull your file together, put it in front of an underwriter if it hasn't already been in underwriting with a to be determined underwriting, and then you will get what we call a conditional approval. Underwriters will then find something, they always find something, to ask. We call those conditions. Hopefully, if me and my team have done our job, or your lender, whoever you're using, has done their job, there will be really no surprises in that. And then once all those conditions are in, also at that time, another important thing, homeowners insurance. You have the right to choose whichever homeowners insurance company that you want to use, but you are required to have it. So talking to homeowners insurance and getting those quotes together and letting the lender know who you're using. After that, appraisal comes in. If that looks good and all your conditions are in, we then move into what we call clear to close, where everyone in the industry on the real estate side does a happy dance. One thing, we also are working with your title company to get the title binder, making sure that that title is clear, that you've got everything pulled together, and then we work with the title company to get together the what we call the closing disclosure. And that is finalizing all of the numbers again, which should not be a surprise if your lender has done their due diligence, that amount of money that you need to bring to closing, and then you move to settlement.
Whoop, whoop. So you basically just got to hear like the behind the scenes stuff, that if you have the right team in place, being your realtor, your amazing lender, and your title company, and everybody is working together, then all of these things will go very seamlessly, because everybody is working on your behalf to make sure that all the timelines are happening to move you forward, so that you don't have that ugly D word happen, also called default, because everybody is working towards positioning you for success and moving towards the fun part, settlement. Yay. So thank you so much for sharing your behind the scenes, where we are tag teaming to make sure that people are positioned for success.